Hello, hello, good afternoon. Welcome to another ES Futures Trading Market Update. It has been a while since the last time I did one of these over the weekend. And just to not to let the habit die, I am doing this again. Today is Sunday, no Sunday, my bad. It's Monday. January 19th is President's Day, this holiday in the US. It is 5:25 p.m. Eastern Time in the US. You were following, we were talking about this weird rally here that we had, in the daily time frame. A rally that that I don't remember that I've seen before. This is very weird, very. This is the ES, right? The same thing. You have the same thing in Nasdaq. High wasn't taken. Russell as well. The Russell took this previous high, but this now. It is curious here, right? How this is holiday. It doesn't matter. It's actually part of the overnight inventory here, but it looks like it can close this gap, But the relevance of this market is this is an inside bar here. What we have is an inside bar here, and the traders go with the breakout of the inside bar. Now in this case, it can come all the way down to here, but who knows? I don't trade Russell, but it's just interesting to see that all of them were doing the same thing. And the Dow was bought exactly from this breakout, We got this breakout when the market made a new high, or the breakout of this high, and it was bought from that again. It was bought like 1, 2, 3, 4 times before, and now it's bought exactly from that level. And the market is trending higher, or at least this market is trending higher. This one now looks the strongest. This one, together with Nasdaq, look like the weakest. We can see, for example, that we have an outside bar in Nasdaq here. Just looking at the daily, okay? Just looking at the daily. And the ES had the chance to close as an outside bar, but it didn't. It just didn't. This is a 2-day balance in the daily. Going back and watching, the weekly, monthly, and daily. This is the week. This is the monthly. There's no change in the monthly time frame. There's signs of weakening in the weekly. And a really, very weird chart in the daily. To me, this is an indication that what we have here is short-term trading mostly. Notice how we have this mechanical trading here in the daily, right? Remember we see something like this happened also in the Dow. There's a breakout here, laggards, removal, rebalancing, another part, the same trend is established again, same way of same kind of activity. Make another support resistance level here. We can see the support now, right? It was sold a couple times before. 1, 2, 3 was bought, 1, 2, 3 from this level. Same thing goes up here. Sold twice, bought 3 times here. It's very, very questionable highs here. And if I'm going to, let's do this. Let's see, you know, that area is very questionable. Let's do the same thing here. I'm just going to do that. And the same thing over here. Alright? Now why I do that? Just because I can see that there's something going on here at these levels. Here, here, here. So this would be, using my daily time frame charts, would be my support or key levels to monitor for continuation if there is any kind of breakout. And right there, as you can see, the 5,000, not this one, the 5,000 is right there. As a way to monitor, because the market hasn't had a significant breakout, pullback. These are my levels to monitor. The last time the market has a pullback, about I think was like 7%, 7 or close to 8%. Down here, I believe. Yeah, down here from this high or from these highs, I think. And this 5% pullback, 7% pullback, 10% pullback would be or will be from this high here. You know, if there's any kind of selling or rebalancing or pullback, you know, of relevance, these are my levels to monitor for downside continuation, and these ones can be, you know, to check after that. And remember, this market has 7 gaps. 1, 2, 3, 4, 5, 6. And I believe there's another one, really small one here that I cannot see, but there are 7 ones here. The current contract expires in, I think, 1 more month. We have 4 more weeks with the current with March contract before June's, before the rollover. Now, one of the things that we have for this week, one of the news, you know, that we can monitor are on Wednesday. We have FOMC here. This can have something. How many speakers we have? 1, 2. Let's see some bill actions here. 4 weeks, 7 years. This one maybe. No, the time. Just let's pay attention to the time. What can happen at 30 years? Well, I don't know what TP is. Well, I have FOMC here. 2 year. I don't know what French is that. What FRN is. Alright. I'm going to save this in my homework. Simple rules, SP, news and earnings, okay? I'm going to save this screenshot, so it's going to be clear. What? Oh, save. Let's save now. What? Give me a second, something happened here. Okay, let's save this. Alright. Okay, that's better. And along that, do remember that there's another thing that we have for the current week, and is Nvidia. Nvidia is the last tech. Alright, here it is. Again. We have Walmart also tomorrow before they open. Nvidia after the close. I think this is the most important of the week. What else? Oh, Home Depot as well. Consumer discretionary. Here. Alright. This is going to be, everybody's going to be watching this. It happens on FOMC after the market close. If you want to know also why these companies, well, you can follow these guys, right? I like this, Earnings Whisper, but I also something else that you can do is, this is Thinkorswim, this is stars. Right. When I have here, so I just go here, right? You can see here below there's a date, 2/20, 2/21 is a yearly code. Right, the last one was on 11/21, and before that you got all those dates. Now, what's happening with this stock is it has a it has a really big rally here, but it doesn't have had too many gaps here. It has one gap here. Seems like it can still keep going higher. It's going to go higher. I'm not saying that. I'm not saying that. But base it also. Something else that happened on Friday. There was a total craziness here that happened here. What is this? MSCI, I already. MSCI? No, that's not. SMCI? Super Microcomputer, yes. Is this the one? Yeah, this was the one. Boy, this was crazy. Just look at the tremendous liquidation that this stock had on Friday. It went all the way up to almost 1100 and closed. How much is this? 825%? 25%. That's just unbelievable how far these markets can go once the sale and the liquidation start. And all of this all of this action that happened during this time. How much can you have from this stock, right? All the way up to here. You have plenty of area, plenty of range to sell, Here. It seems like a meme. These meme stocks are coming. Man, it's just unbelievable. And now, my concern is what can happen to Nvidia after this has happened to this company, right? Because this is also computer related. And we can see, I think that has a lot to do with what happened on Nasdaq here. Oh, so this is the monthly, weekly, and daily charts from Nasdaq. And just look at the liquidation that happened here. No, I won't say liquidation yet. Well, this is a tremendous pullback they have here. You have a rally, and now the trend just ended in one day here. When I check, when I check the market profiles, Nasdaq market profile, this one is the weakest, right? Because what it did on Friday is just seeing a print, right? Seeing a print is way out of the previous day range, and this is a sign of a weak market. But a really serious selling wouldn't do this kind of stuff, right? Just come back, come back almost, to value very high, please very high, and there's a lot of back and forth around those levels. I had something that happened to me on Friday is that I have issues with my trading platform. First, I got short by accident on ES, and then my charting platform wasn't acting well. Right? I thought I tried to short the market, but it didn't reflect. When I checked my position, I didn't have a position, but I could see the P&L moving. And that's dangerous, right? Because you cannot monitor actually. If you don't see a position, you cannot monitor where your entry is, or how you don't have how to monitor the market. That happened early in the morning, and that really messed up with my mindset on Friday. I didn't do anything here. I think the market give us really good a couple good opportunities here. But I wasn't ready to. I was also really tired and just decided to rest. And when I come back to the market was doing this liquidation. And I short the market, I guess, down here when the market stopped here and made a pullback. I shorted here for a really small loss, really small loss. What happened when this kind of trades happen is, I got a rotational day here. Market goes low, takes the low out. It's a day to the downside, but value is higher, and there's a rotation on. The rotation goes higher, the action to the upside ends. There's one action to the downside, another action to the upside. That's a rotation, what we were having. And the odds were the day was going to have some rotation at the closing as well. So I didn't expect that. I didn't expect much from this. Right? The message that I had from this day is, one, the market closed the distributions. Right? Closed this distribution. This is a sign of a weak market. But this kind of pullbacks, this kind of rallies that take the previous day high, also tells me, also delivers one type of information. Because the market is not as weak as price is saying the market is. So there's a lot of things, a lot of information the market delivers that you can read here, and many of those things are contradict each other. And when we have that, we may be seeing something of the action of different time frames in the market. When I had this, I just called it a day, and I didn't do anything else after I covered. Maybe I guess I covered on half back or something like POC. I don't remember, but it was a really small gain, really small then. Now, if I check these 2 days, this is balance. One day, another day here. and settle is up here. Notice what settle is. Notice is settle is basically where this day opened, right there. After all this movement, the market didn't do anything here relative to the previous day. So this is a balance. Now trade guidelines are go with the breakout balance. What does that means? You know, we have a 2-day balance here as well, breakout to the upside. We have a 3-day balance here, breakout to the upside. We have another 2-day balance here, breakout to the upside. 4-day balance here. 4-day balance. This is a look above and fail. Well, we have this 4-day balance here because this is a distribution. Look above the market. Look above, re-enter the range, and once that happens, the potential destination is the opposite side of that range. And the market overshoot, right? Overshoot and take this range out as well. That is what I'm watching here. The other scenario here is the market keeps building, you know, keeps building this balance. We have this 2-day balance and just keep adding value to this. Because remember, tomorrow, Tuesday, we don't have relevant events tomorrow. But on Friday we have 2. Right? I expect a lot of short-term trading tomorrow. And that can be very erratic, you know, sideways trading as well. But this day is different. I don't expect something like this happening tomorrow. No, expecting is also something, you know, something that I should say, because I don't know what's going to happen. But what I saw here on Friday, what I thought happened here, was short-term traders or small traders, undercapitalized traders, you know, getting long, getting short, getting long, getting short, getting the market too long, getting too short, you know, and bigger traders, you know, just bigger traders, because the bigger ones, or I should call the medium time frames traders that were present on Friday, the bigger ones probably were already hedged and were not in the market. And the market was left just for these medium time frame traders or some kind of traders with some capital, you know, to move markets, that were taking advantage of this short, super short inventory here, and then inventory gets too long, too short, too long, too short again. Right now, this inventory, I mean, from Friday is a little bit short, and as you can see, I consider this market weak, but the upper side, what do I have here? I don't know why I have this line here. I don't remember. Oh, I guess it came from this day. This was held back. I think this is history now. This is history. But the all-time high has no excess. It just has no excess. It's very mechanical. It looks like in the same way how the market gets too short here or too long here. This one in the daily time frame has just got too long. And there is some rebalancing, liquidation that's happening after that. Now, the next thing I want to show you, I guess I showed this before, but I have it in my homework again, to not to forget. And this is what I show you in the daily time frame now also. You know, notice how many times the market was bought here. How many times the market was bought and sold from this level. And it is doing the same thing again. It's kind of like a wider range here. And I had this levels market here. This one, and this one. Which levels are these? This one is a 34, and the one up here, the 20. Okay, 20. I believe I had something here before. There was the 23, but this I would consider the 20, the 20 here, or maybe even the 17 or something like that. I will go with 20 here, and of course down below the 5,000. From this day, these are the areas of volume. Let me check what do we have up here, because the trading has been very mechanical. Traders were, or the market was being, those areas of volumes were acting like, just like magnets, and the market was moving back and forth. Wherever the volume was, that's the direction the market was. I mean, it's quite obvious. It is going to keep, is the market going to keep doing the same? I have no idea. All right. Now, let me put, this is also very, I guess let me show it here, what I mean with that. Look, these are the areas of volume. All this volume, for example, when the market came down here, was just forced to cover. But look where now the volume is. It's not here, but it's up here. This area here, this area here. This one here, this one is history, this one as well, this one as well, and one here. But notice how scattered this volume is, all over the place. This one, I would consider this one as well. This is some tiny bit, really low here. And nah. Let's do it this. But notice how much volume this has. 10,000. That's really low, man. Here we have 16s, like 50% more. This is nice. This is way better, right? 17, almost 20 here. Look at this. 15, 14s. What else? I don't have more here. But my looking forward for the week, I think all eyes are on Nvidia on Wednesday, and that day after the market there can be some kind of swings there, maybe. And the positioning, there is always some positioning that can happen. Most of the hedging of the positioning for that event has already happened. Was Friday here or here. This is a good area for something to hedge the longs, right? This is a good area. I mean, when you have your hedge actually also acts as a position in the opposite side. And I still think the structure of the market is very weak in the lower side, very questionable. The only reference in the upper side that remains is this high, only 2 ticks of excess as an all-time high, and down below, how close these are, right? Really close to each other. The 5,000 right there, a weak level here. Buying coming pretty much from POC. Another mechanical level here. Can you see how close these two are? Another mechanical buying here. Just this high here on this one. um, and so on and so on to the lower side. Another thing that's very subtle that cannot be seen, cannot quite obvious, is this, that the trend to the upside in the weekly time frame has ended. This day actually traded below this low, which was the weekly low of the previous week. It's not that much, it's not that obvious, and it's really close to this area here, right? So this support resistance level as well. This is, to me, very, very questionable. Now, as usual, to close before the market open, I think I still have time. What I always do, or I try to do, is to play. This is the latest episode of the week ahead of Jim Dalton. Let's hear what he has to say.
The week ahead. On February 2nd, 11 trading sessions back, the market attempted to seriously auction to new highs. While the market reached a new high, overall trade has not been convincing. I'm using the January 31st high at the 49.30 level as my key support, with secondary support at the futures 5,000 level. While the market has continued to hold on to gains, the last two inflationary reports have led to higher yields and less certainty regarding the FOMC decision for 2024. The market has not yet determined what to do with this information. The next significant scheduled information arrives on Wednesday, February 21st. Two pieces of information that day. In the afternoon, the latest FOMC minutes, but really important, following the close, NVIDIA earnings. The options market are showing an expectation of 11% move either up or down following the earnings. Extremely slow tempo, both in the morning on the decline and during the early afternoon recovery, was very indecisive coming into the long weekend. The late break, similar to the early morning rally, was communicated via tempo. I wholeheartedly agree with Oscar Wilde. Nothing that is worth knowing can be taught. We phrase it another way. Tempo can't be taught, it has to be learned. Once you learn tempo, it can be an accelerant to your trading. I'm trading Friday as a balanced day and applying the balanced trading guidelines as we come into Tuesday morning. The balanced trading guidelines are relatively simple. Remaining within balance further tightens the balance. Go with a breakout from balance in either direction. Fade or go against a breakout from balance that fails. If the market, for example, attempts to break to the downside and it fails to carry through, the potential destination trade is then to the opposite extreme. It's very difficult when you have a long weekend to have real good insight at what the market's going to do the following week, particularly since there's really no information that I see scheduled on Tuesday, and the next big move or big information is on Wednesday. Thank you. Have a great week.
Boy, this is good.
Either up or the market has not yet determined what to do, and less certainty reaches 5,000 level. 930 level as my key support, 31st high at the 4930 level as my key support, with secondary support at the futures 5,000 level. While the market has continued to hold on to gains,
Okay. All right. Jim was talking about these areas. You know, the 4930. This is the one here. The 5,000. He's not looking at this one here. The 4930. Okay, I got the 4934 here. The 5,000. This area here, right? This area is not as clear, for example, as this one. Right? I have one there, 1, 2, 1, 2. Where's the other one? Oh, the other one is in the daily time frame. I guess it's okay. It's this one right here, right? But it's way below here. It's still too far from where the market is at right now. Okay, the market is open. This is the opening of Tuesday. Oh, and regarding the inventory, just check this out, right? Look at how prominent this POC is. You know, there's a lot of trade that happens here. This is a perfect distribution curve here. What we have here, really nice. Notice where this selling or the buying came from, exactly from POC. Exactly from very mechanical, right? So if this market keeps building, keep buying here, there's a good odds that this can take this market can come back to take all this inventory out. Now let's check. Yeah, there's sideways trading here. This can go in either direction here. In either direction, you can have I mean, I'm talking about tomorrow, right? You can go up here, or you can go below here. There's a lot of inventory. Notice where seller is. Seller is down here. All this inventory is long here. I would say pretty much 100%. And look at these lows here. 1, 2, 3, 4 lows right there. 1, 2, 3, 4 lows right here. This one takes these ones out. And what's happening again? I have this low right at POC and today's low right there as well. I don't trade the overnight. What's happening here? This volume is, and the opening on Sunday was very weak opening here, super weak opening. Notice where this. Notice how much volume this had, for example, 34,000. The market, in regular trading hours, can make 60,000 in like 15 minutes, right? Or less than that. Right? That's why I don't consider this as a serious inventory. Now look at this, but the same way how this market went to the downside here, with basically nothing here, is the same way how this market opened on Sunday. You know, it's exactly the same way, but this time it's going to the downside. Really question out here. There is just no. This shows no interest. There's no interest in the market here. Now, I'm talking about Nasdaq. For Nasdaq, I have these levels here. Because this market was going lower, I don't have too much. When this level was taken on Friday, it just went, you know, it just went really fast here to the downside. And the rebalancing that happened here has a few thousands here, and really a bunch of thousands here in this area. I will pay attention to this area here and this area here. If this area is not taken on Monday, for example, from the opening, there can be something to the downside. And remember, if it comes back through this, the potential is to the downside increases. Right? Especially if it goes fast through this one. If there's some building, some accumulation back and forth, some back and forth here, the odds are. I don't want to say that the odds decreases because it all will depend on context. What kind of market do we have that day? What kind of market we have tomorrow? Everything has to be seen in context. Everything, yeah. I don't expect. I am not that anxious for the day. I think there's a lot of things that can happen, and I will let the market settle. And the obsession is if the market opens up here or up here with a gap or a downside gap here. Remember also, if there's a break here, the 5,000 is right there too. You know, and these kind of levels tend to act like an anchor because there's going to be a lot of traders that are convinced that this is support, and other ones are going to be convinced this is resistance, and longs are going to be coming to the market here and a bunch of shorts here. The odds are that longs that traders use this level as a support resistance is higher than, for example, this one, or this one, or this one up here. Okay, unless there's any questions, I don't have too much, or I don't have more here. And I hope I can see you tomorrow before the opening. I usually start to stream. The idea, my goal is to start 10 minutes before 9 and go at least through the opening, at least for one period. Most of the time I start a little bit later than that, and I stay way later than 9:30 or than 10 a.m. as well. All right. I hope you have a good rest of the weekend. Stay safe, my friends, and see you tomorrow. Bye-bye.